I've learned quite a bit just by going into the fire pit and doing it just like you have. We do more than others just by taking action.
Thank you for coming to join us for another episode of the Stashcast, where we have interesting conversations with interesting people. The Stashcast is brought to you by Needle. What if you could use data and analytics to predict real estate transactions before they occur? You can with Needle. Come check it out at Needle, NEDL.us to learn more. All right. I am super excited today. We have Josh Appelman with us. He's the founder and CEO of Appelman Capital and also a fellow podcaster. Josh, thank you for joining us. And I've got a general idea of who you are, but you just popped up on the scene in my world. Maybe just give everybody an idea of who you are and what you do.
Yeah, that's Stash. I definitely appreciate you having me on the show today. And I look forward to giving some nuggets on my journey in real estate as well as in business. But the brass nuts of it, I'm a 5-time Inc. 500 5,000 recipient for my past business. So I scaled from $0 to $10.5 million per year. That was over the course of 8 years. And then journey took me into real estate, starting with really zero knowledge everyone else starts with, to now where we own quite a few properties, apartment complexes, and we're looking to scale. I look for value add distressed properties that we can add value to, whether it's through renovations, repositioning a property, and just making something that has been dated or just not taken care of, and we can make it better. So that's where I'm at currently in my journey in life and as a career is real estate.
Yeah. So I didn't know that you had a previous career. What did you do before getting into real estate?
Yeah, I built a large service business, flooring installation business. Started it in 2007 and 8 when everything was happening with the economy. Everyone got pushed into different niches, and the flooring was still, it seemed like it was happening. Got into installing flooring and hiring crews in front of me, and built from 1 crew to 2 crews to 3 crews. We've got to a point where we had 9 locations, 52 employees, 300 plus flooring installation providers out every single day throughout Kentucky and West Virginia and Northern Kentucky here in Cincinnati. Again, over the course of 7 to 8 years, and from $0 to $10.5 million per year, you learn quite a bit on the journey up. That career, that all of the heart, effort, energy that went into building that company into more of a closure in 2019. When a much larger company was coming in and essentially was taking our territory. So seeing the writing on the wall, I needed to pivot. I pivoted the company into doing insurance restoration work and doing some more things to keep everyone busy. But ultimately, we had to downsize very quickly and reposition. We were also riding the coattail of a large retail provider. So we were providing installations for a big box store. Essentially, it was hindsight's 2020, but at the time there was a ton of growth, a ton of opportunity. It was a great experience. But looking back, you put a lot of eggs into somebody who's got a ton more control over how your business does. I would have probably made some changes. It got me here to where we're at right now.
Man, that's fascinating that you were able to build a business and then fortunately you saw the writing on the wall before catastrophe. But even still, that must be heartbreaking to put your heart and soul into something and then have it ripped from underneath you.
It wasn't easy, but it goes back to the adage that this is happening for me, not to me. And at the time, whenever anything happens, you don't look at it that way. It's because it does strike you at the nerves because you put everything an entrepreneur does is through heart, effort, and energy. So it's our baby, building a company up and putting all the people in place, processes, technology. We do it first, and then we teach others how we want it to be done. And that's with anything in business, just like you, Stetch, when you've got all of your other brokers and associates out there where you've done everything that they have done already, and you've mastered that position before you put someone else out there to do it on your behalf. And that's what it did with my other company as well. It's just, and 52 employees full time, I had to hire 200 plus to get to the 52 good ones. So it's not that anything was handed to me. It was a lot of money spent, a lot of lessons learned. But again, it got me to where I'm at today, where we're now building up another team, different type of team that we buy apartment complex. We look for distressed assets. We've got renovation crews, project managers, property managers, just different capacities. But we've scaled once, we're scaling again. And with real estate, you can keep what you build.
Yeah, that's true. You put your destiny in your own hands versus somebody else's. Well, that's amazing, man. That's admirable. Cheers to you. So Now so you went from flooring install business. Sounds like you had some great contracts and then you moved into insurance restoration work. Are you still doing any of that?
We're not. So it was just, if you put a 5-year target out there and where you're going, it's just the path that gets you there. So you still have to generate income, generate transactional income to get you to where you're at. So real estate buying apartment complexes was certainly a target, but I had zero knowledge. So you've got to acquire the knowledge before you can go out there and purchase an apartment complex. You learn, you take action. You learn, you take action. It's constant learning and then applying what you've learned into action. And that's exactly what we've done. The insurance restoration work was transactional to keep things going, keep cash flowing, keep cash in to equal to cash out. We've transitioned out of doing any work for any customers. Essentially, we are our own customer in renovating the properties that we purchase.
Yeah, that's awesome. I'm sure that the prior roles that you had or businesses gave you some great knowledge and insight about what to do right and things to avoid. It's not like you're
For
coming
sure.
in as a complete rookie.
Yeah, no, the knowledge that's been acquired has certainly complemented what we're currently doing. I grew up in construction. As far as knowing the industry, knowing renovations, what lies behind the walls or underneath the floors, whatever it may be, having that trained eye has certainly helped us know exactly what we can and can't do to certain properties. You feel blessed and cursed at the same time with construction because it's construction. But when you can apply your knowledge to your own assets, it's huge. It's been rewarding for sure.
That's awesome. So see your content that you're putting out, but how many properties or how many units are you guys up to now?
We solely own around 204 units. We've also done some partnerships. We've done syndications. We've readjusted I want to say our overarching business plan as well. Because there was a time where we wanted the 2, 3, 4,000 units and keep on closing. And that's not an issue as far as making that happen, as long as you're buying the right properties and buying it right, of course. But at the same time, we've got a lot of runway left. So what's the rush? We're going to buy 2,000 units.
Yeah.
That could be 2,000 problems. And then ultimately, we're responsible for the performance on other people's behalf. So I've already been there in my career through the flooring installations, the survey scores, it's no different. You have to please your customers. And investors, you're pleasing them based on their returns. So let's take a step back. Let's one, buy, but two, let's get there on our own. And we can. Vertically integrated, that word's getting thrown out a lot. But when you're truly in-house management, in-house renovations, in-house asset management, you're vertically integrated and you can blend that hard cost across all of your company. So you're not relying on different companies to keep them in business. You're relying on your own company to keep different verticals in business. So we can purchase properties differently than others. And owning them 100% is doing it wholeheartedly, and it's going to be a slower growth, but at the same time, we're going to get there, whether it's 10 or 20 years.
Yeah, exactly. Like you said, buy the right 2,000 units instead of let's just rush into 2,000 units. Cause I've seen some groups do that. And that's a great way to run into a bandsaw.
Oh yeah. Yeah. Especially now you get caught up in FOMO, fear of missing out. And we've been, I want to say I don't want to say we've been fortunate because we bought everything based on true in-place value. And that has been extremely hard to do, but we've been pretty disciplined and we've made the right deals, purchased right, put the right debt on all of our properties. We have not bought anything based on a pro forma future value. So we made it through the thick of it, the 2021 through 2022 era where you couldn't find really anything to even purchase that made sense. And there's still a lot of properties that don't make sense right now, but yeah, we bought a great basis. We've full cycled a few of them and continue to deploy, and we're looking to buy more today.
What are the characteristics that you're looking for when you're evaluating a property for acquisition?
I want it to be, I want there to be management issues. I want there to be deferred maintenance issues. I want it to be dated. I want it to have operational issues because we can come in, we can plug in our operations. And from day one, we're going to wipe out all of the nefarious expenses that have been built up from the existing property management. So we're going to, anything that their financials are looking like, they don't really we don't look at them as if that's how the property needs to run, because expenses, it's just like mowing the grass in any business. You have to keep the expenses mowed down. You have to constantly look at your P&L. Where's the cash going out at? What do we need? What do we truly don't need? Some people say you just need to make more money. At the same time, you need to keep your expenses where they make sense as well, because things start to just grow over the years. When we're looking at financials, we'll look at what they're currently pushing out on expenses and then what we feel we can come in and plug in. And then we want to see what they've done on CapEx, or what are the cabinets? What's the flooring? What is the amenities, the finishes? Every one of our units is now brand new, and brand new. It's 2024, and you pull up, you drive up, and it's 2024. It's not pull up to 1972 and then walk into 2024. And that's another piece that I see some operators, syndicators making, is that they'll update the insides, but they won't complement the outside with the inside. So you can achieve the premiums by just making the outside up to date as well. But as far as buy box, go ahead.
Well, I was going to say, I think a lot of operators do neglect the curb appeal. That's the first thing you see when you drive up, and you're going to make immediate judgments on, do I want to live here or not, based on how the grounds are kept, what the sign looks like, has the building been painted. And I love some of the transformations that you've done that I've seen with just by simply changing the color. And some people are like, oh, I would never paint brick. That's a stupid idea. But it's no, you have to show that there's been a change. And I think changing the color of a building is a great way to be able to do that.
But yeah, and we do not. I do not paint brick, just because you're turning something that's maintenance free into something that is going to have some attention within 10 years. But you've got to make a huge change when the property looks that dated, and when you're pulling up and the property looks dated, the brick's out of date, the color's out of date. Let's make some moves. Let's get this place looking brand new. And yeah, it's totally intentional. We don't go in there and guess colors. Everything's been from A and B test. Is it this one? Is it this one? Is this? And then finally, we have the color scheme that looks sharp, looks good, curb appeal's on point, and then we apply the paint. So there's no guessing. Everything's intentional, and there's different concepts that we test out before actually picking the one that's going to go.
Wait, so how do you do that A and B testing on color schemes and things like that?
So there's software you can apply overlays, and then you apply the color to the overlays. So you take a picture of the building, and then you sketch it out, apply the overlays, and paint it, and paint different colors. And it's been very effective. But something that big of a deal, you can't just splash paint on the wall and hope it works out.
Can you do that on the interiors as well?
You can. Our interior renovations are very vanilla, very standard, gray, black, and white color scheme. It's clean. It's trendy today. It'll probably be trendy for the next, call it 5 or 8 years, whatever the next color is going to be. So agreeable gray on the walls, white trim, base, flooring is always LVP. Your black hinges, black hardware. We do use granite countertops on everything. That's more of a strategy than a cost. All of our labor and materials we procure at a wholesale rate, being in the industry as long as we've got national pricing with vendors. But the granite, if we're going to go in and put laminate countertops on the cabinetry, we can expect to replace that laminate countertop maybe even the next turn. If somebody puts a hot pot on there, it starts to bubble. Versus granite, it's a solid service. We don't need to worry about it. Pay the price today, so you don't need to worry about tomorrow.
Yeah, I agree with that. I'm doing a 6-unit renovation myself over in Camp Washington, and that's my philosophy so do you do actual granite, or is it solid surface?
It's granite. Yeah, it's granite. And people like the shiny object. That's a shiny object. Just like stainless steel versus black or white appliances. Shiny object is going to lease up quicker than the units that don't have those shiny objects. And then, you're going to be spending more, but on what's cheaper? It being on the market for an extra month, 45 days, or going ahead and paying a few $100 more to get the shiny objects in there.
Yeah, I agree with that. I think the folks I've seen be successful in the industry and have really nice products, they follow that same philosophy. I was touring with a guy back in, must have been like 2012, I think so. And it was 280 units and 70% occupied. It was a wreck. It was a mess. And I was like, Bill, how are you going to turn this thing around? Aren't you intimidated by this? And he's, listen, it's simple. If you offer a clean, safe place for people to live and you respond to the maintenance requests, you're always going to have tenants. And then I think taking that a step further is the philosophy you've just expressed, which is which is similar to another group here in town that's good clients of ours. You offer the nicest product in the market, you're going to have the choice of the best tenant as well. And you're going to be able to command the highest rents. So you're doing it the right way, man. Good work.
Yeah, no, we feel that way too. And like you had mentioned, the maintenance piece, operations is everything. You respond to a service request right now, they get instant reply. And if you get those completed within 24, 72 hours, you've got service after the sale. Your customer is your tenant. Then you keep them happy. They stay longer. You make your money truly make your money on the renewals. If you keep that customer attended throughout the entire duration of the lease, what are they going to experience if they leave? I think that's going to be their biggest question. Is it going to be the same? Is it going to be better? Is it going to be worse? Just answering the phones. I think that if you pick up the phone right now and call 70% of property management companies, you're not going to get anyone to answer the phone. It's absolutely bizarre because if the phone's ringing, that's either someone who wants to lease from you or it's one of your customers. It's not a bad phone call either way. It might be something that you'd have to do, but we're very diligent on operations. My past company, it was customer service, everything. Survey scores are everything. You have to keep the voice of the consumer there, and we've carried that over. That's something that's going to be very scalable for us in order for us to grow as well. Operations in house. Once we brought property management, and I think it glued everything together.
Mm-hmm. Did you start initially using third-party management?
We did. I didn't know anything about property management and really didn't want to know anything about property management because we wanted to purchase the assets, renovate, and that was our scalable model. Purchase, renovate, and then let operations be on a third party that has mastered that piece of the business. And I found out that they have not mastered that piece of the business. Scattered sites are extremely tough to manage in general. These are not 150 unit complexes. Scattered sites, some are bigger than others. Some are 48 units, some are 40, some are 33, and then just scattered. So you've got a different type of management that you have to put in place, but we're able to manage our own expenses and truly pay for the problem versus throwing money at a problem that comes up, and just keep a finger on the pulse on an operational level. And then the experience that you get from that, it enables you to even scale more because now you can purchase assets and have total control of the performance. And then your business plan gets executed faster.
Yeah.
It's
so none of what you've just started, it's simple, but it's not easy. I'm curious, what pieces of technology have you found or implemented or used?
We started out with Buildium. When I hired my first property manager, first purchase was a 33 unit apartment complex and third party property manager. They were using their software, and then I wanted to mimic everything within the property using Buildium. Every month we'd record all the financials, who's paying what, so we can keep our set of books, and then they have their set of books. I didn't know that's not even what you do. Typically, owners just get a statement. On our end, I've been a business owner my entire life, so I want my set of books. I want to see where the expenses are going, and that's so we already had our property management software going, but we weren't managing property management. We weren't doing the daily. We just did it. I wanted my set of book. We bought another property, and the reason we got pushed into property management is because a property manager was actually stealing deposits from tenants. So it was based on necessity because I still didn't want anything to do with it. It wasn't a strategy to get into property management. It was I had no one else to even hire to even fulfill this problem of property management. And that was and we were renovating the entire complex. And then we've got this operational piece in the mix. But in order to fix this problem, it was, let's take over, let's manage all of our properties. And that's what morphed into what we're at now. That was a little over a year ago. But what I've already learned in the past is no different than what we're doing now. It comes down to simple operations, applying right technology, learn, apply, just a different form of business. You have to be able to attend problems, have the right people in place, and it's a different set of vendors.
Yeah.
It's not, as long as you have the right people in front of you, it doesn't keep you in the weeds too bad. I know more now than I've ever wanted to know as far as just the daily. It keeps your finger on the pulse.
Like drinking from a fire hose, isn't it?
Yeah, it is. But the amount of knowledge you acquire from the operations enables you to get to the next level.
Yeah. You were going to articulate your acquisition criteria earlier, and I cut you off. I'm wondering what are the things that you look for when you're evaluating a new acquisition? And then my second or follow up to that would be, do you trust the broker's pro forma?
That's a loaded question with the broker's pro forma, because I get that side. There's two sides to the equation. There's three. There's the seller, there's the broker, and there's the investor. The broker is put in the worst position because they're hired to do the dirty work, find, in a lot of cases, the guy that's willing to take on, in a lot of cases, what could be a bad deal if it's bought at that price. But that's what the sellers are giving guidance on. So this is just a quick story. I had a broker call me yesterday and say, hey, I've got 80 units and this one is in Louisville. Guidance is 6.25, this 6,250,000. And our spin around 1.8 on CapEx. Like, all right, we'll see. I'm always going to say, yeah, send it over because I want to see what this deal is. It's just spiking interest. Guidance being 6.25. They've done some renovations. I open up the financials and the NOI is 226,000. So like, how's the NOI even going to support the purchase price? It's impossible. We're $3 million over of what the property would even support on a purchase. How are we even going to take this to the bank? The only way you can finance that is by coming with more equity to the table. And that's either going to dilute your returns personally, if you can front that kind of cash and you want to offload that kind of cash in one property, or it's going to piss off a lot of investors that deploy that amount of equity into the deal. But they've done it not, and the age of the asset comes into place and a lot of other things. But when you've got pricing that is that far off based on in-place financials, what's the incentive? If the broker would come to me and say, hey, I've got 80 units, the seller wants 6.25, and that's on seller financing, or he's willing to go 3.8 cash. Now, okay, now we've got some different perspectives here, because he could get his price at seller financing. Maybe we've got a different type of balloon, different type of amortization. And then maybe we've even got some deferred interest payments to get the pro forma where it needs to be. You've got a little note around the property of creating maybe some barriers to entry, or that you can create incentive for the investor. But when you're coming up with that price, with those numbers, it's impossible to get anybody to the table.
So what was the justification? Oh, the rents are way below market and they put all this CapEx in and you can get the rents. They just haven't done it yet.
That's selling based on pro forma. And yeah, I never partaked in pro forma. We've done all these renovations. You can achieve these kind of rents, but you have to do all the work. You have to evict, you have to find new tenants, you have to reposition the property still. But that's the work. That's rolling up your sleeves. That's the worst part. The renovations and on our end, that's fun. Let's go. It's finding the good tenants, finding the paying tenants, finding that whole process of repositioning a property is truly in that operational function. And I wouldn't ask you sellers are unrealistic. When I'm the seller, I'm unrealistic. Stash, you're going to tell me, Josh, you're unrealistic. Here's where we need to be. Or you can deploy a little piece of seller financing, get your price a little closer, but this is what it's worth. If me and you both are unrealistic, we've got tunnel vision, we're going to achieve this price, then chances are we're never going to sell together.
Yeah, we try and be as realistic with a positive spin to it, an optimistic spin to our underwriting. But that's the worst thing. And I think talked about it at the top, we learned the hard way. Sure. Oh, you have 200 units and you want 20-30% more than what it's worth. Yeah, I'd love to work on that. And then you go out and you bang your head against the wall and you don't get anything. So it really becomes a waste of time for everybody. And then it erodes your credibility as a broker as well. So you want to try and avoid, in my opinion, I want to try and avoid those sorts of situations.
And When you tell me though, I'm the seller and the brokers tell me, hey, look, this is what my buyers are going to look for. This is a realistic scenario, but what else can you offer? What can I offer on this platter that's going to make this property more marketable? And I think right now the seller finance piece is huge. And I don't know why more sellers aren't using that strategy. I know when I go to sell, there will be a seller finance component because I still want cash flow. Every time that we get cash from our property, we've got a new problem that we need to solve.
Mm-hmm.
Now we've got cash. If it's sitting in a bank account in the wrong bank account, it's not generating anything. But if you keep compiling these cash flow producing assets, whether it's seller finance or rentals, that's the game. That's the goal. So it's just having different levers that you can pull. But I think right now, with the way the debt markets are, the way interest rates are, seller financing components on a lot of these larger assets, that should be a component. That should be a play.
Yeah, it's just a question, I think, of how you structure that and probably maybe position it to the lender. Because a lot of them, when I first got started back in 2008, when I first got into brokerage, I had heard myth of all-inclusive trust deeds and very generous in today's market seller financing terms. And you really just don't see a lot, or land contracts are everywhere. And I really haven't seen a lot of those. And I think it's because the lenders are just not comfortable with it, but because they don't want somebody in second position behind them. But I think it depends on the lender, depends on if they're a local bank versus an agency lender. And then it depends on how you structure it, because we had a deal a couple of years ago, and this is right when rates were starting to run up. And the buyer was like, listen, I need some help. The rates have changed from the time that we valued it to the time that we were under contract significantly. And so the sellers were like, all right, we'll structure it as, I think it was like a pref equity piece. So it was essentially seller financing, but it was structured as equity with a buyout provision in it. And I thought that was a creative way to solve the problem. In the end, we didn't actually have to take anybody up on it, but it was
That's smart.
Great thing to see. Yeah.
Yeah, that puts them in an LP position. They still have the asset. They still get depreciation. They still get preferred returns. That's good.
Yeah. Yeah. Interesting. Have you seen seller financing a lot recently? Because we haven't seen
I
that
think
much of it.
playing in a different sandbox, because again, I'm looking for assets that have operational problems that are not the 200 or 150 and 200 unit communities that are stabilized, that are just kicking off a coupon flipping return. I'm not looking for those. I'm looking for, since we're the true owner, true operator, I'm looking for something that I can add a tremendous value to, and then refinance within, call it a 14 to 18 months period, get our equity back, and then move on to the next. But when you get to a different type of properties, because right now we're on the come up, so we have to do things that we're not going to be doing 5 years from now, I'm absolutely asking for seller financing. And a lot of these original owners, whether they have debt on the property or not, they're okay with it. They want it. They're telling me more about it. What does it look like? How does it work? What is this? And it's if anything, it's a conversational piece to get things moving. It's an ability to, or it helps us in order to scale. Because ultimately, if you have to have equity coming from somewhere, or you're just going to run out of money. You have to be well capitalized. You have to have cash in the bank. If you're ever here, you have to, what if scenarios, if then what? So if you're just constantly buying properties and there's nothing that's replenishing it, or you can't buy because you have to wait to build up equity, then there's not a scalability factor to it. So seller finance is a component that will enable it.
That makes sense. Makes a lot of sense. I'd like to pivot a little bit. And we talked before we started officially about podcasting. I'm curious if you have thoughts or feedback or advice for somebody like myself who's really just getting started here.
You're giving it, people that are tuning into your podcast are tuning in, and if they take one thing away, one nugget, that could totally change the trajectory of where they're going. And that's happened to me so many different times. I go to an event, or I have a meeting, or I talk to you and I have coffee, and something that is said, we weren't even there for that conversation, but something got said, and I'm like, damn, okay. I plug that in. And now I've got something else that now works. It's connecting the dots. That's the journey of life. You just keep connecting dots. Tuning into your podcast, people could connect their dots based on one thing that's been said. Now this finally makes sense. That's what podcasting is. People talking to people, different
Yeah.
strategies, different things, different conversations. And that's the cool thing about podcasts. They're all different. It's just like you. I started just by doing it. I think that's the biggest piece. Is just take action and start it. And then everything else will come together one way or the other.
Yeah. Everything tends to work out in the end, one way or the other, like you
Sure.
said.
It happens for us instead of to us. It's just the way it is. But podcasting is great. You can get a ton of knowledge out there just by listening.
Yeah. My thought on this was I'm already having conversations like this on a daily basis almost. So it's like, why not just put them on video and push it out to the world? That was my thought.
Yeah,
And
no. And you've probably learned different things from meeting with different people to have an excuse to get on a show and talk to each other. And it's just getting in the same room, the energy, the vibes.
yeah, it even gives me the opportunity to have an in-depth conversation with somebody like yourself. Because do you remember when we first met in person? It was at that meetup, and I was like, "Oh, hey, Josh," and you're like, "I'm sorry, who are you?" I was like,
I've never met.
"Right."
Yeah.
But yeah, like we passed each other, so to speak, on the phone, but having a venue like this is a great opportunity to get to know somebody.
Yeah, I totally agree. I totally agree. And just like that, then you're getting a bunch of operators in the same room and brokers and debt arms. You get the right amount of energy in the right room and things. It's incredible what conversation can bring. Just different things get solved pretty quick.
Mm-hmm.
I went last week and asked a question, what's everyone doing on the ESG animals, emotional support animals? And because that's a problem. When you're leasing up to tenants after they're in the unit, they say, oh, by the way, I have a pet. This wasn't on the lease. And pets, the wrong pets destroy units. They
Yeah.
piss in every corner. They bite. They chew off baseboard. Pets are doing what pets are supposed to do, and then they get an emotional support paper that says that the dog is supposed to be with them, and then they pay nothing on the pet. That's it.
Right.
It's a fraud in different sense. I'm asking people what they're doing about it. One mentioned a website, and now all of our tenants are going through application process on this website that verifies that the pet is truly an ESG animal, and the doctor is verified who signed the form. It's not just some online website that they paid $50 to get the letter.
Right.
Those are the things that just different conversation.
Mm-hmm. So if they do in fact have the correct paperwork, is that still pet fee then? Can you still get that?
No, you can't charge for it. You can't. It's an emotional support animal is a medical device. It's supposed to be. So you
Okay.
can't. And the purpose of the pet fee is to charging for future damages more than anything. And it's what happens. But we're trying to plug the gap, trying to build a gap. It's something small,
Yeah.
but when you're come over to operations, it becomes a bigger problem. As every economy is a scale. More units you have, more problems, more money that can go out the door on the little leaks, the paper cuts.
Mm-hmm. So you have investors in your projects, or you own 100% of everything?
We've got one project with investors. I've got another property with two partners. Both are going great. Both are going exactly how they should. We're in control of the performance. I've had investors message saying, hey, when are we going to sell this? Hey, we're still doing the business plan. We like what's happening. This is exciting for us. But on investor perspective, they're wanting their return. That's it. There's nothing else. On our end, there's a emotional piece where we've taken this from distress, from slumlord situation to now it's bright and shiny, feels good, looks good, operates good. Rents are getting pushed up, or renewals are on spot. So we've got a vested interest to keep the property going versus investors who have a vested interest to get the cash back and do whatever. So that's pivoting to where we just want to be just owner operator, just own everything we have and not worry about pressure to sell.
Yeah. Yeah, that's fair. I've been listening to a podcast on different proptech solutions, and there's one out there, I think it's called Stake. And what they do is it's almost, I think I might butcher it, but it's like a CRM for tenants and prospective tenants that it learns a little bit more about them and what they're, for instance, trying to save for. And then instead of like concessions, oh, here's 2 months free, the rental rate is $1,200, and instead of us discounting that by 2 months, we're just going to give you, I think they give actual cash back as a form of thank you thing. So it's interesting hearing about
That's
solutions like that.
and I'm having meetings with different prop tech providers. Yeah, like yesterday, there's one that's called Susu, and they report to all the
Yeah.
credit bureaus for the tenants on behalf of the tenants, which is great. It can't hurt your credit, but it can help your credit by reporting. So it can't negatively impact it. But we're signing up with them. It's $2 per unit per month. We're going to figure out how to turn out liability into an asset as far as line items go, which we can bill back to tenants, but it helps them as far as reporting. It helps them get the path of home ownership eventually. Um, and then there's another one like Show Digs because we're using Appfolio. So there's a lot of little plugins that we can now lever on an operational piece to help even AI. If we plug ChatGPT into everything, where can we, even on the front, at least if we get an inquiry, I want ChatGPT, I want AI, I want to plug in to take care of that front piece, get them scheduled. And then when they're ready for the application, let operations kick in. But take care of all that noise on the front end. Those little things that you can plug AI in right now. I'm constantly trying to leverage as much as we can.
What have been some of the most successful things that you found, or maybe some of the things that you thought were going to be great and didn't turn out so great?
Everything. I've always been a big proponent of R&D. Spend the money, find out if it's something that's going to work. If it doesn't, throw it away. And there was a point in my career I paid for, I think it was probably around 300 grand on an on-demand platform for home services. And that sounds great. It worked, cash flowed, but we had to throw it away. It's way too much cash. There's just not enough margin. But as far as operations on property management, building was great. We switched over. Appfolio has enabled us to now we've got all these plugins available. Now we've got different components. Show Digs, we partner with them. I think we've got a different solution now. I don't want to put that out there, but I'm not sure it's going to work. That's the front end piece. Inspections, as far as inspection apps, going in and finding out the CapEx. We use contractor foreman right now for all of our operational piece for renovations. There's not a ton of integrations in with it. So the more that your systems can talk to each other, calls through APIs or under one roof, so to speak, the technology, the cleaner it is. We use Asana every morning. Every morning we have an operational meeting, 7:45, all hands on deck. Go over to today's tasks, the weekly goals, monthly targets, quarterly goals, make sure that we're on track. Have you heard of Hello Data?
No.
That I would take note on Hello Data. They're going to be up and coming. Talk to the owner. I actually had them on my podcast. So they aggregate all of the data from all the listings of apartments that are out there online. So they're finding out how much they're being listed for to the tenants, and then they find out how much they were actually rented for. As far as comps, rent comps, finding out what different submarkets are doing, that's a huge tool. It lists fail up versus trying to call the complex and see how much their units are going for.
Yeah, that's awesome.
So
I was listening to a podcast yesterday, same one, and the founder of Redfin, and this was back in 2021 when it aired, but he is working on a solution called Deep Sentry. And basically it's security monitoring software that also has AI built into it. If you just have people come in to and from your doors, things like that, it's not going to monitor you, but I guess they have a YouTube channel, and I need to check it out, but they have a highlight reel of each week, all the things that they've stopped. Like it could be scaring a bear off of a porch or deterring a robbery. And apparently they have a team of security guards in the Philippines who are monitoring versus having somebody on site. So you just have a couple of these cameras around and they're, actively surveying everything. I thought that was really cool.
that's wild. And that's out there. That technology, you can drop a trailer off with cameras. I think Predators has them in some of their parking lots, but even apartment complex, if it's in the wrong place, you can have that out there for additional security. But then you've got 24-hour security personnel watching it. And even if it has a microphone, you can scare them off from doing something. But
yeah, that's cool. What they have. They'll be like, hey, what are you doing? And then they can call the cops if they need to.
Yeah, it boils down to almost everything is selling as a service. If somebody's willing to pay for it, which a lot of people are, then sell it as a service and see if you can scale it.
Yeah, that's what we're trying to, that is what we're in the process of doing with Needle. I'm
Talk
excited for
about
that.
that a little bit.
I
Let's
would
dive
love
into that.
to. Thank you
Yeah.
for asking. Yeah, so Needle is a data and analytics platform with the initial hypothesis behind it being, what if you could use data and analytics to predict real estate transactions? And it came out of a frustration of mine where I'll talk to you, hey, Josh, you've got 20 properties. Are you interested in selling anything? Automatically, it's no. But, and it's impractical and silly to go down the line of each one of your properties. But if you can call somebody and intelligently say, hey, I'm calling about timber trails. Um, oh, we were actually just looking at that for a potential disposition. And so your hit rate is much higher. And so what we've done is we've, cataloged the country, and using things like rental rates, occupancies, loan maturities, ownership behavior patterns, benchmarking versus the competitor set, and then rent the properties as hot, warm, cold. Hot being, hey, we think it's likely to trade. Warm being, yeah, maybe. Cold, it's a possibility, but probably slim. And what we've found in back testing the model, some selected markets, is we're about 45% accurate. So if we name 100 properties, about 45 of those are going to trade within the next, say, 6 to 12 months. So it really allows somebody like myself or somebody like yourself on the acquisitions chair to be able to go out and try and get in front of these transactions before anybody else. And what we want to be able to do is show you your portfolio, show you the benchmarks of how it's performing versus the competitor set, allow you to say, hey, I'm interested in selling or refinancing at this projected price that we're going to show you. And then if you do, that'll send an alert to the subscribers to that market and say, hey, you should call Josh. He's just said he's interested in selling this, or he's interested in refinancing this. Similarly, we want to be able to show you a hot list of prospective properties that we think might be of interest to you based on your current portfolio, so that you can say, yes, I'm interested in that at within this price range that we're projecting. No, I'm not. But if you say yes, when you click on match buyers, you'll show up as verified. Like, oh, he's at least said that, yeah, he would be interested, so that it allows brokers and, like I said, acquirers properties to short circuit the traditional process, which is what we have today. And it really came out of, I've been slinging deals for many years, and I had this realization that there's so much data out there, but I don't have the right way to, it all looks in reverse. And it's like all the platforms are mostly encyclopedias of what has happened in the past. But there's nothing aside from just a macro analytics of what could happen in the future. There's nothing that says, hey, here's where you should go and spend your time first. And so that's what we set out to do, and that's what we're doing.
That's a secret sauce.
Yeah.
Because if I knew who was getting ready to trade, who to focus the energy on, and here's the that proves it, that wipes away all of the wasted efforts. And that's the biggest problem with wasted efforts. Wasting time is wasting efforts, and you're focusing on the wrong people that aren't. There's just nothing there, and your platform wipes away potentially 55% of that.
Yeah, we're trying to, for sure. I've done a lot of, we have American Can and Peter's Cartridge and Crossing at Cheviot all on the market, and they were all flagged as hot. And I can't game the system. They're just,
I would have almost. I'm surprised you didn't gatekeep that forever.
you still have to sweet talk the princess, so to speak. And that was one of my concerns up front with my partners. They're like, listen, we're going to scale this thing. We're going to make so much money that you're not going to have to be a broker anymore. I was like, okay, fine. I'm in.
What does the back end look like for you all on a platform fee level? Is it per deal?
No. So we're looking at a subscription model monthly based on either market, region, or nationwide is what we're thinking right now.
What is the moat around your all's business? You've got other platforms that are competing for the same end user. What's the moat?
Yeah.
The big existing platforms out there are basically
an encyclopedia, right? They're the 800-pound gorilla out there. And they're just saying, here's everything, go figure it out.
there's one platform out there that purports to have intelligent leads, but
Their platform, I have tried it and I haven't found it to be very useful or intuitive. They give you like a 2-week or maybe 7-day trial, and then you got to start paying for it. And honestly, like I'm pretty savvy, but I couldn't really figure out I couldn't really figure out how to use it. Whereas with ours, you log in and within 2 clicks, you're in front of we call them intelligent leads. And then the moat is it's taken a long time first is access to data through APIs, things like that. And
that 800-pound gorilla I mentioned,
they're not selling that. They won't sell an API.
that large accounting software platform,
Won't.
that firm that purports to sell intelligent leads.
Won't. So where do you get the data? How do you get it? We found a vendor that is willing to work with us. But the beauty of them is that they have every single parcel in the United States. But the challenge with that is they have every single parcel, and it's not sewn up. Crossing at Cheviot, that's 132 units. They're 132 separate parcels. Or I'm sure you have some properties where it's, I don't know, call it 80 or 100 units, but they may be across 2 or 3 parcels. And so how do you sew those things together is not an easy thing to figure out. And then I think just the usability of the platform. Like I said, you're in it, and within a minute, you're in front of actionable things that you can go and do.
And I'm making you brainstorm because this is what we need as entrepreneurs. What is in your platform to where other people can't come and just duplicate it, mimic it, and then repackage it, and then essentially copy your platform? Is the moat around the business to keep the people away?
Yeah, we're in the process of filing for our patents. So that's one thing.
That's huge. That's huge.
And it's been an enormous lift to get to where we're at. When we first started, it's like, all right, let's go see if we can prove the hypothesis. And we were just spitting out Excel spreadsheets. And I would get 20 deals on a spreadsheet, 20 properties, and 7 or 8 of them would be in play somehow. It was on the market with myself or a competitor under contract. We were valuing it. And so it's, we're definitely onto something here. And it's not just looking at, you could subscribe to
Loan monitoring service,
for instance. That's a great data source, but they just show loan maturities, and they'll show deals on a watch list. But oftentimes, if you look at the watch list, they have cracked concrete.
You're pulling in it all. You're pulling in all the data. And then you're making it visual, making it to where it's tangible data. You've got all of these API calls, and then it's saying this one is hot. Here's why, and here's how, and this is because.
Yeah, that's right.
That's huge.
Yeah.
Because the other platforms simply don't do that. They send you into the wilderness and good luck finding it.
Exactly. Yeah. And I only feel like recently, after 13 years of being in market, I only feel like recently I know what I'm doing. It's, again, what I've found is that so many of our proposals and deals that are under contract or that we're valuing are being flagged as hot. So we're definitely onto something. So.
And that's for any size, small multifamily?
Right now, yeah, we trained it on 50 units and up, but as we continue to work through things, we'll probably expand that lower. Because if you think about Cincinnati has a ton of smaller product, but so does, Seattle, or so does any market, really. And a 30-unit deal in Los Angeles will sell for $9 million, $12 million.
Once you all start gaining traction and you know that you can now back that bus up to smaller properties and then reach the masses, because now it caters to really all investor types.
Yeah.
That's huge.
Yeah.
What about marketing? How do you direct market out of the site? Get a hold of the owners.
So as a user, how do you get in touch with the owners? We have through Cherry is our data provider. They have a true owner verification. They do that hard work, which makes it a lot easier. So
That pays for itself. Instead of
100%.
going through this skip tracing and trying to find that information, that's huge. You're spiking my interest because it's how do I leverage my time if you're going on and exporting a list and then
Yeah.
going fishing.
Well, yeah, and right, exactly. Or I call it hunting. I've got some clients I'll go hunting with, because I know they can close. But even with that, you're still trying to figure out, okay, I don't know. I still use the platform, but oftentimes what they're wanting to go out and make offers on aren't being flagged as hot because the owner doesn't want to sell. And in that
What
case,
you've got I got to ask.
Yeah.
What do your associate partners think of this? Because giving access to everyone else the same hot deals when you're in-house guys, that's what they feed off of. They want those listings.
Yeah, they should use it more then.
I like it. There we go. Exactly. They need to stay hungry.
Duh.
Get those listed. Get them under contract to list or someone else.
These are the Glengarry lead. I'm giving you the Glengarry lead.
No, I love it. They stay hungry, man. It's the easiest time to kill lions after you ate, and you just never know. That's huge. Keeps your guys motivated, keeps them in tune. This competition is going to be around no matter what. Once you get comfortable, you're going to get whacked.
Yeah, 100%. And the way that brokerage works and deals work, as it's been explained to me hundreds of times, is, oh, we have to sell it back through the guy that sold it to us, but we have to list it with them, guy or girl. But if you bring us a deal, if you bring us an offer, we'll sell it off market. There's no loyalty in the off market. So that's what we're trying to capitalize on is, hey, these are off market deals that you can go get in front of before the guy down the street lists it and takes it to market. And then that's how you can short circuit that system.
I like it. I think, and then is Cincinnati the only test market, or how many other markets are you at?
No, we have the whole country.
Oh, you're okay. I thought you all were launching city after city, but you're live nationwide.
Yeah, we're probably going to start opening it up for subscriptions July, August sort of time frame. But no, you need massive data sets. And that's another thing. Like you have to have data engineers. Like, I don't know how the sausage is made, which is a good thing because I would probably tell people.
If you need to get a private jet, open up different cities and it's cut the ribbon. You're opening up Indianapolis, cut the ribbon, fly the jet out there. You got to get a couple markets under belt, prove it out. But man, that'd be cool.
Yeah, we'll get there. But yeah, you need a massive data set. So you need everything. When we were training it, we used 10 years worth of data of transactions and rent and all this. And it was only through doing that we were able to confidently say, okay, here's some ones that we think trade. And then by tracking those over there, by back testing the model, that's how we proved the efficiency of it. So it's pretty cool. We're at the top of the hour here. Josh, I really appreciate you taking some time. It's been a great conversation. Thank you.
Yeah, no, likewise. Talk about real estate all day, every day.
Yeah. If people want to get in touch with you, I'll tag you in it, but what's the best way to get in touch with you?
Yeah, I'm on socials. Real Estate Hustlers podcast is out there. We'd like to do at least two episodes a week. We try to. Some weeks we have guests cancel and we keep moving on. But Real Estate Hustlers podcast, I'm on LinkedIn. Josh Appelman, that's Appelman. Appelman Capital, Appelman Property Group, an investment arm and our operations arm. I'm out there. Look me up. Get in touch.
You're the man, Josh. Thank you so much. I hope you have a great rest of your day.
All right. We'll talk soon. Thank you.
All right. Okay.